Good morning, welcome to this Phoenix Blue update on Tuesday the 13th of September. I'm Tom Colley and I'll talk to you about the markets this morning. We had a pretty quiet day really yesterday. The only significant move in the market was an almost complete reversal of the huge bearish day we had on American equities on Friday. We'll obviously have a look at that chart in a moment, but first let's just have a look at the news from yesterday and going forward into today. The only real news event yesterday was a speech by FOMC member Brainard. If you remember, we said that she was a dove, had historically been cautious about raising rates. She stuck to that line. The comment, or the overriding comment, was prudence warranted as raising interest rates posed risks. The general point of what she was saying was if they had upside risk, i.e. inflation or expansion or excessive expansion of the economy, which really isn't a problem at the moment, they had the tools, i.e. the ability to increase rates, traditional tools to deal with that. She was suggesting if rates were raised too quickly, they could create downside risk, i.e. contraction in the economy, and because even with a small rate rise, even then rates are so low that the traditional tools, i.e. rate reductions, weren't there in any quantity to be able to offset that. So basically she was saying we need to increase very steadily so we don't increase any downside risk. So really that sort of was at conflict with a lot of what was said last week, and although the S&P move had already happened on the majority, that was certainly the stance that the markets took. Overnight we've had industrial production from China, which came in just above forecast, so nothing to talk really about there. Today we have year-on-year CPI for the pound. We have a speech from the ECB President Mario Draghi at 10 a.m. along with the economic sentiment figures from Germany. No clear indication about what Draghi may speak about at 10 o'clock. It may be that he doesn't actually touch on subjects that's going to interest traders, but we need to be aware that he is speaking just in case he does talk specifics. Okay, here's the dollar index from yesterday. Well, we talked yesterday morning about how we'd had a bullish move through Thursday and Friday. Yesterday we had a bearish move and we ended up with somewhat of an indistinct day, an inside bar. And so far today it looks like we're down testing the $95 level again. But as you can see, I've got another smaller trend line in here, the dotted one here. What we've got is we've got more and more indecision in that area. We can see that absolutely replicated on the euro here. We got short the euro Thursday afternoon after or late on during Mario Draghi's speech. Yesterday we saw price rattle around predominantly within the range here, but even almost stopped us out at one point. But now there we are, right bang in the middle again, and this is the matching trend line, short-term trend line to the one on the dollar. Again, another triangle, more indecision, looking for something to happen for price to break out. Now, I did say it was quiet yesterday, so I'm not going to show you anything else on FX at the moment, but this is the S&P. This is the huge bullish move we saw, bearish move we saw on Friday. We got into this move intraday on a retest of this trend line and level through here and took it down there. We pulled the stops in, we'd had money off the table, and price did actually move down yesterday before this huge move back up, which basically came right back up to almost exactly where we'd entered the trade. Again, the confluence of this level and this trend line through here. Now, if we actually look at that on a 1 hour time frame, this is the move down from the day before. close the previous day was somewhere around here. We got some more bearish movement overnight stroke early morning, and then we found ourselves very much in this range between 2108 and 2116. Our stop on our short trade was just above this level. However, we also had a trade set up at around 2116 itself for a breakout. It's unusual for us to take a breakout, but we do see these we have seen over and over again any big downside moves on the S&P almost immediately reversed. So we were watching for that. This long trade was only a half risk. We put half a risk on as a breakout, and we were waiting for price to pull back to add in another half there. The reason we took the breakout trade more than anything was we weren't confident it would pull back. We did think that based on previous experience this move would go really strongly. It did, in fact. I think it went stronger and faster than we actually predicted, but right back up to where we started. So we'd had the trade down, a change of direction, the trade straight back up, and anybody who took both those trades certainly probably has hit their target for the month already in those 2 days. Currently, we've had a pullback down. There's a level through here at 2150 that we're watching. I think a live screen had just broken that, but again, that big move, come back almost to where we started, suggests indecision again. What we saw through here was the markets being concerned that rates, the US would raise rates, but following Thursday and the ECB comments that other economies weren't willing or able or looking to actually increase further quantitative easing or extend the quantitative easing they're already undertaking. So that somewhat Friday put the scares on the market, and that was the reason for that. I think more of a reality dawned through yesterday, and then as I said, when Brainard spoke, it gave it the final push through up here with another dovish statement. Another market we got into yesterday was coffee. We were a bit slow getting into this market. This is the weekly double top. I'm sure through here last week there was an end of day or even an intraday entry into this. We didn't spot it, we overlooked it, whatever the case would be, but we had a lovely high test bar there at the double top on the weekly. Now we didn't actually place a trade on that, but interestingly, we talked about it, but once the market opened, it opened with a gap. We go over to the daily. So the market opened here, and there was an open gap between the low of Friday and the open on Monday. What we saw is what we expected. Markets looked to close gaps. So it came back up, closed the gap, closed actually to the close of Friday, where some traders placed their orders rather than on the low. As you can see here, I was rather more cautious. So that's the technical reasons we took that trade. We also had our COT analysis to rely on. We had what we call a COT extreme signal here that suggests the market was at a top. So that gave us added impetus. We could then add in the fact that our seasonal analysis shows that in the month of September, coffee normally makes a short move. We look back seasonally over a period normally of about 20 years and look for a high probability of that happening, and that's what we have, along with a technical signal, along with a commitment of traders signal, giving us a really good picture. So we've got technical, COT and seasonality all backing each other up, hence we take the trade. Now this is one area of how we trade it. If it's something that you don't normally trade in commodities, not that these methods are restricted to commodities, if you don't trade the commitment of traders or seasonality, there's all areas you can learn about with Phoenix Blue, and we have a week on Friday, a 4-hour free trading session with our leading fund managers in London on Friday afternoon, September the 23rd. That'd be an opportunity to learn more about how we trade with the commitment of traders analysis, how we trade seasonality, but also trade alongside our fund managers on a live basis. Now, if you are interested in this, go to the website, phoenixblue.co.uk. This is the events page. You can just click through here and leave your details. If that's a date you can't make or you'd like to talk to us directly, go to the contacts page and simply email us through there, and we'll keep you abreast of future trading events, or make an appointment to see you or talk to you about what you're looking to achieve in terms of your taking your own trading to the next stage. Okay, guys, that's it for today. As you could say, not a great deal in the markets. We're still looking, as I said yesterday, for dollar strength to play out, either intraday before it gets up to that 96.20, 96.30 on the dollar index that I spoke about yesterday. If it does get above there, then we are bullish that market. Okay, have a great day trading. Trade cautiously. Look after your capital, and we'll be speaking to you again in the morning. Goodbye.